safe.
Okay, perfect. So I guess like the instructions in
Sure,
English.
yeah, that'd be perfect.
All right. So for this case, you'll have 20 minutes to make your presentation in front of the judges. If your presentation lasts under 18 minutes, you'll receive a 1-point penalty for every 30 seconds. If your presentations last under 15 minutes, your team will receive the score of 0 at the general ranking for this case. If after 20 minutes you have not completed the presentation, you will be stopped to move on to the period of questions. At the end of the presentation, the judges will have 5 minutes to ask their question. I remind the jury that it is mandatory to ask a minimum of 1 question during this period. If after 5 minutes you have not finished answering the question, you will be stopped. Throughout the presentation, I will indicate the remaining time using cardboards at 10 minutes, 5 minutes, 2 minutes, and 30 seconds. I will make a final countdown using my finger for the last 10 seconds. I remind you that it is prohibited to say the name of your university, and if you do, you will receive a penalty. I also remind to the public that it is prohibited to use any electronic device during the presentation, and that the public must stay quiet until the end of the period of the question. Before we begin, I'm asking the room to turn off their cell phone and put them on mute so that we don't interrupt the presentation. I will now ask the judges to present themselves, and after you'll be free to start your presentation.
Nicolas Hamel, Finance Manager at Belmezien.
Megan, I'm a Finance Manager at Procter & Gamble.
Etienne Duclos, I'm a Senior Associate in the Private Equity Group at Investissement Québec.
And I'm Alex, I'm the Senior Executive Vice President of Corporate Financing at Investissement Québec.
The clicker doesn't work, so you'll have to, you'll have to use the...
Okay.
Yeah, go ahead.
Switch.
When you're ready.
Just going to test it out. Good afternoon, members of the Investissement Québec Board and Mr. Berton. We are Buy Capital Partners, and today we are here to present to you Project Funding Secure, an assessment of Link Ad. So, before we begin, we'd like to present to you exactly who Buy Capital Partners is. As you know, Mr. Berton, you hired us to help you assess, make an assessment of Link Ad. Now, Buy Capital Partners is Quebec's, or rather Canada's, leading boutique investment bank based out of Quebec, and it's been in operation since the late 90s. We specialize in strategic IT advisory, and this year alone, we've had roughly $160 million in deal transactions. Historically, we've advised companies such as Lightspeed, Gartner, and Valsoft. Next, I'd like to introduce you to the team that will be leading this deal. Here with me are my colleagues Jordan, who has previously worked at BMO Capital Markets, as well as Emile, who's previously worked at Banque Nationale in investment and debt capital markets, as well as myself, Amrit. I previously worked at Desjardins in investment banking. In terms of this pitch, Jordan will be focusing on the analysis, Emile will be focusing on the implementation, and I myself will be focusing on evaluation. So, why are we here today? Well, we're here today to really assess Linked Ad from both a growth and an equity perspective. We came here with a three-pronged approach, focusing on the thematic tailwinds, as well as the company analysis, and really focusing on the SME Express project. And with that, we recommend that you allow Linked Ad to go through with the SME Express project due to the industry attractiveness, again, the thematic tailwinds, the strong company business model that's really focused on recurring revenues and the software as a service as a software as a service system, is really the SME potential from an ESG perspective, or environmental, social, and governance perspective. And with that, I'd like to pass it on to my colleague Jordan, who will go through with the analysis.
Thank you, Amrit. So first of all, we're going to dive into the industry analysis. The macro analysis. Now, the three metrics we were looking at was, first of all, growth in real GDP, which currently right now is at 2%, very favorable for macro environment. Secondly, the prime lending rate currently right now is at 3.95%, which means debt is obviously relatively cheap compared to historical periods. And the third metric we wanted to look at is really the equities market. And we know that there is a 10-year bull market or so in the equities market right now, longest in history. So we want to keep those three things in consideration with the rest of our presentation. Now, what this means is we might be at the late stage of the credit cycle, so going forward, we need to maybe expect some slowing growth or even declines in growth. Now, I just want to go over a little industry analysis. So how the actual ad exchange works. Now, first of all, obviously, you think of a website. A user visits that website. Now, this means that an impression is submitted upon that website. And then what an ad exchange does exactly is it receives bids from companies that want to advertise and selects the highest bidder. That highest bidder then gets that ad space on whichever platform they're operating on. Now, you can think of this as kind of sort of like a stock market. For example, the New York Stock Exchange. The more volume you have, the more money you can make. So what this really means for us is that strategic partnerships with these companies, with these online companies, is a key success factor in this industry. Now, a quick outlook of the industry as a whole. So first of all, we have mobile advertising. And we've been seeing steady growth from 2017 till now at roughly 20% compound annual growth rate per year. Another thing we're looking at is video ad revenue, and we can see this everywhere. We see this in Facebook, YouTube. More companies are using videos to expose themselves on the internet. And this has been growing at a 22.5% growth rate in the past several years. Now finally, digital advertisements, as we see, that is basically a common theme, and as well, it has been growing at a rate of 19% per year. Now, what this means that there is strong growth in the industry right now, which is great for your company. Now, looking at some competition. So who are the key players in this industry? Now, in the ad market industry, there are two main types of players. So there are the large players. Now, these are companies such as Amazon, such as Google, and they take up roughly 90% the share of those revenues from the ad exchange services. Now, one thing we need to note is that these companies are mainly focused on large companies. They want those big deals. Now, the second player in this industry are the relatively small players. So some of the key competitors, Credo, Rhythm One. And what we've noticed is that this industry is very fragmented. There are a lot of players, not exactly, there's no specific, many players, and they have different selling points. And few of these companies right now are actually targeting SMEs. So with that being said, we think that the SME market is extremely attractive, as it has been left untapped by both the large players as well as the small players in the industry. Now, moving on to a company analysis. First of all, we want to start off with the products. So the current models, we're going to look at the current models for large companies. So as we mentioned before, these companies such as Google, Amazon. Now, just an example here. So as you see, Mazda, for example, in the current model, in the large player model, they approach Metro Media. And they are looking for ad space. They pay Metro Media money, and then Metro Media money gives them the ad space. Now, the current, linked ads new model is a bit different than that. So what it really does is it connects both the advertising company, the company who's wishing to advertise, with that end consumer. Now, what this means is that SME Express offers the right product to market fit and targeting the more small and medium enterprise enterprises. Now, looking at the company's current strategic plan, so we know that their plan is really focused on software as a service, SaaS. Now, software as a service, if you're not familiar with, is basically you have recurring revenue, so you're selling monthly, yearly subscriptions to your services. And what this does is it creates those recurring revenues. And these are recurring, the recurring revenues on the advertiser's side, the ad exchange's side, and as well as relatively forecastable costs on the advertising side. So what this means is steady cash flows for everyone involved, which is what we want. Now I'm going to pass off into Amarit, who's going to talk about our valuation.
Thank you, Jordan. So now that we have an idea as to what the industry looks like, as well as where LinkedAd is actually positioned within the industry, we can now try to value the company. So we decided to take a two-pronged approach, using the discounted cash flow as well as the comparables method. So we'll start with the discounted cash flow. Now for this method, we needed to project out several line items. We started with top line revenues. Now, in your company's perspective, you gave us roughly a 5-year CAGR of upwards of 30%. However, as my colleague Jordan had mentioned, we're in the late stage of a bull market and of a credit cycle. So we decided to take that growth rate down by a notch and really have a 5-year CAGR of roughly 20%. And now again, this revenue model is really based on that recurring revenue, and that's really a factor of SaaS. Next, traffic acquisition cost. Obviously, this is a huge line item. It comes right before other cost of goods sold. And we decided to decrease the basis points, or BIPs, as I'll mention now, going forward, because we believe that your link ad will become more efficient going forward. From a gross profit perspective, we straightlined the cost of goods sold at roughly 86%, and it slightly improves, the gross margin slightly improves from towards the later years by roughly 10 bips, and again, that's a factor of increasing revenues and really just becoming a more efficient business going forward. From SG&A and other, because LinkedAd expects itself to hire more employees, notably 11 new hires in the next year, we decided to project out this selling, general, and administrative line item. Now, we assumed a margin of 11%, and we reflected a steady margin. We assumed no margin efficiency, as the new hires will obviously cost more, and that's why we decided to straight line the margin. So the earnings before interest, tax, and amortization. Obviously, because this is a software business, depreciation isn't a significant line item, so we decided to omit it. So as you can see, we forecasted a relatively steady margin of roughly 3% as a percentage of sales going forward. So working capital assumptions. Now, when we use the discounted cash flow method, we need to really figure out how we can get to the unlevered free cash flow, or rather the cash flow available to the investors in the business. Now, two huge line items that take up a lot of this free cash flow are known as working capital and capital expenditures. So for working capital assumptions, we decided to slightly improve the cash conversion cycle going forward, as you can see through the net working capital ratio decreasing to roughly 1.1 times. And this is reflected in our working capital graph. As you can see, obviously there's a constant need of cash to operate the business, so there will always be cash outflow when it comes to working capital. However, we have slight improvement going forward. As you can see, the change in net working capital slightly decreases going forward. Next, capital intensity. Now, historically, this business, apart from 2016, hasn't necessarily been the most capital-intensive business. It's roughly been roughly around 0.5% as a percentage of sales, or capital intensity, and hence we decided to straight line that going forward, and we arrived to a capital intensity of roughly capital expenditure of roughly 100 million per year. So from those line items, we get to unlevered free cash flow, and basically the key point here is that in 2019 alone, we can produce, or roughly LinkedAd can produce $4.7 million in unlevered free cash flow. Now, you may be thinking about the need to pay debt holders. However, the company has no debt on its balance sheet right now, so there is no need to pay interest or maturity payments. So there's roughly $4.8 million in free cash flow in 2019, and this is key because it provides the ability to pay that $3 million dividend that we'll be addressing in a few slides. Additionally, we use the WACC, or weighted average cost of capital, roughly 12.25%, which I'll break down right here. So really the big assumption here is that we decided to use a beta of 1.5. The reason being is because we took the beta from the perspective of roughly 1.2, but we took it up a notch because we know that this business is relatively small, and hence there's more risk to it. We assumed a risk-free rate of roughly 1.75% to reflect the 10-year treasury, a market risk premium of 7%, and again, there's no debt on the balance sheet, so the WACC is basically the cost of equity in this case. So from a valuation perspective, we get an enterprise value of roughly $203 million. Again, because there's no debt on the balance sheet, net debt is actually negative in this case, and so the equity values have been higher at $209 million. we assumed a long-term growth rate of 5%, which is, again, above the the usual range. However, we want to factor in inflation. Inflation right now is about 2%, and so with a long-term growth rate of 5%, we have strong growth going forward. So, what about the comparables perspective? Now, for companies that operate in SaaS, there's one notable metric, enterprise value to revenue. Now, enterprise value to revenue is significant because the revenue for these companies is huge because these companies rely on a recurring revenue model. And so we used the comps and we got to an average of roughly 1.0 times the enterprise value to revenue, and that yielded an equity value of roughly 107 million. So for our final valuation, we decided to split things up between the DCF and the enterprise value to revenue metric. We assumed a 50% split between the two, and that yielded a final equity value of roughly 158 million, and a share price based on the current roughly 34 million shares outstanding of roughly $4.5. Now let's look at the capital structure. Now we know that SAP Express is a significant project. It requires, right now the offer on the table is an equity partnership. And so here we have the current capital structure. Now we can see that the change is for IQ and Capital Investissement Québec and Capital Data would show that their Class D shares would represent roughly 5% of the total outstanding shares post the equity partnership, and as for Capital Data, it would increase to 2%. Now I'd like to pass it on to my colleague Emil, who will walk us through implementation.
Thanks. So why partner with IQ? The reason being is that here we have a few synergies that can be produced by a partnership with IQ. What you're looking for is not just some funding for some cash. You're looking for a partner to be there for the long run. So a few benefits. First is the culture. We know that language and alignment is aligned with your current growth perspectives, with growing and implementation in Europe as well. And the French is going to be an excellent benefit towards that. Number two, thematic investing. We know that small to medium enterprises represent a great opportunity for digital transformation. And thematic investing is something that we will be touching upon in just a sec. But we'll go through ESG and how that is so important. And then the bottom line comes down to we believe that IQ and LinkAd are fit a great partnership because we want to grow together the Quebec economy. So let's give it a little timeline of the implementation. So 0 to 3 months, we're going to get the funding secured. From 3 to 6 months, we're going to launch the SME Express, and it's going to be completed by the end of the 6 months. From 6 to 12 months, we're going to have the ESG integration. So the full ESG platform integration will be done within the next 12 months. So it'll be fully funded. ESG will be implemented in the next year. So the ESG framework. So here we're looking at going green digital. What we care about is the environment, the social, and the governance. So for the environment, we want to screen the small to medium enterprises on the platform to make sure that they are environmentally friendly. Number two, we want to make sure that these are social enterprises that all the community can benefit from. So we want to really target those small to medium enterprises that are heavily involved in the entire community. Number three, governance. We want a lot of diversity and inclusion. Mrs. Farnworth is a great member to present to the board of LinkAd, and I think we all believe that she'll do a great job on the board. So from a funding perspective, let's take a look at the alternatives. Number one, we could have gone with debt. Your company is very highly unlevered, but with borrowed money does not come, you won't get any human capital. So by partnering with with IQ, you're actually going to get a lot of human capital. You're going to get some help on the equity side of the deal, which is not something you would get if you went with an all-debt deal. Second alternative was an IPO. Now, an IPO would be great, and it is something we do recommend you take a look at down the line. But for now, for a $12 million project, you don't want an IPO. It's simply too small. You don't want to split too much of your current equity with other investors. So So an equity partnership is the most favorable option. We believe that IQ and LinkedAd can grow together in the long run, and for this reason, we highly recommend the equity partnership. So let's take a look at some risk and mitigations. So the first major risk is a culture clash. The second risk is the failure of the SME Express project, and the third risk is the saturated market. So mitigations. So similar business and language. So we know that the project with SME and the partnership with IQ and SME Express represents a great opportunity for some synergies with respect to culture and all the cultural identities that can be seen with the growth in Europe. However, this could cause a culture clash. This can be mitigated because they both share the same values, they come from the same place in the same country. The failure of the SME Express is very unlikely due to thematic tailwinds. What this means is that ESG is something very popular today, and this could carry the momentum forward. So we don't see the failure of the SME Express project anywhere in sight because of the strong momentum and thematic investments such as ESG. The saturated market. So SM Express will allow LinkedAd to target a very niche market that hasn't been tapped by the major players yet. So this allows them to penetrate a very small market while the rest is taken care of by the major players such as Google and Facebook. This is very niche to the small market of small to medium enterprises. So let's wrap it up. So we came in and we wanted to recommend to allow LinkedAd to go through with the SME project via an equity partnership and allow a dividend payment to go through as well. The three-pronged approach that we took was one, the industry attractiveness, number two, the strong company and business model, and number three, the SME potential from an ESG perspective. So the summary of results. We've asked for the final equity value of LinkedAd, which is $158 million. The IQ versus capital data stake percentage, it's 5 versus 2% respectively. The dividend to the shareholders is a viable option because you have strong free cash flow and can afford the payment before the transaction is due. And finally, the risk assessments, we just mentioned a few mitigations for that. I'd like to thank you so much for your time. I'd like to open the floor for questions.
So we heard loud and clear the reasons why you recommend going forward with the investment. I would like to hear you or have your perspective on the primary risk. What is the risk you're seeing? Either an internal risk or an external risk or both for this company?
Yeah, so I think the biggest internal risk is the management, and they don't have experience in the European markets. So, as we've seen, some of the board members have very good, exceptional experience. However, they haven't tapped into that, or they haven't had experience tapping into the European market. We do believe that IQ has suggested some board members that have that experience, and we see that as the biggest risk factor. But also, that mitigation would be perfect for that situation.
So you talked a little bit about the beta that you've been using. How do you position
The what, sorry?
the beta,
Okay.
the factor? Where do you position this company? Is it, from your perspective, is it more an IT company or it's more a marketing company?
Right, so from a beta perspective, obviously this company taps into a lot of markets and it doesn't really conform to your typical Bloomberg GICS sub-industry sector. So in this case, we decided to mix it between an information services as well as a marketing, focusing on the online perspective. And that's why we didn't directly take our beta from the perspectives, just because we felt that it's more of a blend between multiple sectors and it deserved an additional little risk premium, a volatility premium.
Good. What is your perspective on the $3 million dividend that is expected to be paid?
So I believe that, as my colleagues had mentioned, if LinkedAd goes through with this equity partnership, there's obviously a lot of pros, whether it's from management's perspective or the growth perspectives. But from the exchange of that, from the perspective of that dividend offering, we believe that it's viable, as we showed through the unlevered free cash flow. or even levered free cash flow due to the severe under-levering of the company. We believe that it's viable. What LinkAd would get in return is significant for future growth opportunities. So we believe, again, at the end of the day, it is viable from both a quantitative and a qualitative perspective.
So you would allow?
Yes, we would allow it.
Considering I think there's 75% of the revenues that come from the United States and we might open to the European market, do you believe there's a risk with currencies?
Well, with the project costing $12 million, there's definitely a risk for currencies if we're going to go ahead and if you're going to go ahead and explore the European and American market. Once the revenues start actually growing to much larger sizes, we definitely recommend you to go ahead and hedge some of that currency risk, perhaps using a futures product.
You mentioned 11 new hires. Do you think there's any risk given the market saturation for employment?
Not necessarily. We believe that there's an influx of talent, and this reflects to our diversity and inclusion. We know that there's an influx of talent coming from, whether it's countries like India, for example, that are coming to North America. We believe that the talent will be present. We believe that LinkAd's future growth perspectives will attract potential immigrants or highly talented individuals. And so, from an ESG perspective, we believe that we can hire from outside, obviously immigrants who come to Canada, and we believe that it will be viable going forward, just because there will be a talent influx. We believe there will be a talent influx at the end of the day.
From the tech sector?
Yes, exactly.
If you decide to do some screening for ESG on environmentally businesses and community-friendly businesses, do you think there could be like an ethical issue with screening those companies?
I mean, ethical issues, we want to make sure that all our companies are actually ethical. So that's why we want to implement that screen, right? It's really to make sure that those companies, do good for the community. We're targeting small to medium enterprises, so it's really important that the community involvement is there. The moment we hear something, let's say on social media, on Twitter, for example, that is negative, let's say, and that's a company that we're currently partnering with, that would raise some alarms. We'd have to figure out what would be recommended to go forward if that happens.
Did you consider issues around data privacy?
Around what sort of?
Data privacy?
Data privacy. So the issues around data privacy, we want to make sure that everyone's data is protected. And we recommend you that you go ahead and make sure that your data is protected, whether it's through a secured cloud. Now, user data, the collection of user data is not something we primarily discussed, but because it is simply just a platform.
The period of question is now over. Thank you very much.
Thank you.